Home prices are starting to fall.
Buyers haven't been this pessimistic in a decade.
The housing recession will probably end up being more severe.
Have you guys seen these financial news yet? If you haven't, you must be too busy taking L's from Wall Street bets. Hopefully you didn't lose everything like these people on Reddit and have some cash on the side for the house market crash. Here's a quick summary on how everything got started. House prices have been growing dramatically since 2020. Even the ghetto area were getting up to $1 million offers. Sometimes buyers would have to offer $100K extra in order to get accepted. This is insane, right? However, time is about to switch, causing many sellers to sweat all over the places, but hopefully they won't sweat on their Gucci remodel home. In this video, we will discuss why the market is about to drop back down and what you should do if you're planning to invest in the market. If you're new here, please consider subscribing with the bell on to our investing channel so that you can invest in yourself for your better future. Before we start, we want to shout out to our awesome subscribers for subscribing to our channel. Now let's begin. First, here are the things that cause house market prices to fluctuate. 1. Supply. Almost everything in the market is affected by supply. Do you remember when it's hard for you to find toilet paper in 2020? You will be angry at those people who hoard toilet paper while you have to use the paper towel instead, right? Yes, it is because of low supply during the time. Same for the house market. Supplies were being low since the builders had to pause and be stuck in the lockdown. Many sellers were scared to sell their house too, since it is hard for them to find a new place to live. Moreover, it was also caused by the next one, which is demand. Demand is when a lot of people are buying it. The house market was doing well because everyone kept buying due to low interest rates. People were shopping like it was Black Friday. Houses were bid way over the asking price. Some areas were offered 200K plus extra and still got rejected. That is ridiculous, right? If you think that is ridiculous, please smash the like button so that we can beat this YouTube algorithm together. Number 3. Interest rates. Interest rate can cause the price to drop or rise. In 2020 to 2021, interest rates were at all-time low, which impacted the market since everyone wanted to lock up fixed low interest rates. However, now the interest rate is rising back up from 2.65% to 6%, which lead to higher mortgage prices, and this will reduce a lot of buyers since most of them are not qualified or able to afford the mortgage. As a result, sellers must drop their asking price or their house might be stuck on the market for a while. Number 4. The economy. More jobs, more money, and a nice honey, right? If you get what I'm saying, this will also impact the house value because people will likely to be able to afford it. But what happens if the economy is bad? People will likely save money or be broke. This is why it is important to subscribe to our channel so we can help you from being broke, especially during this scary time like right now. Next, let's talk about why the market will likely to drop more. First, potential recession. This is making people fearful. Just look at our stock market today. It doesn't look pretty, right? Speaking of stock, don't forget to sign up on Moomoo to get up to 15 free stocks that value up to $2,000. Limited time offers, so act fast by clicking the link in the descriptions. Moreover, the 2008 crash was no joke. It was a super hard time for everybody, especially those who invested huge in real estate. Second, interest rates rising. As we mentioned before, the Fed rose interest rate up to 6%. Many sources stated that it will most likely increase more. The higher the interest rate, the higher the mortgage cost. This is why sellers have to lower their house price in order for it to get sold. If they won't and they're still greedy, they must pray and hopefully someone's drunk enough to buy it. Number 3, more sellers. More seller means more competitions. This is good news for buyers because now they have multiple options. During the lockdown, there were barely any houses on sale. It's literally like a sausage fest party, if you know what I mean. No options to pick for most buyers, which cause some homes to be overvalued. This is why the more in the market, the more likely the sellers drop their price. Now let's discuss some solutions if you plan to invest in the real estate. First, enough savings. Purchasing a house can be very risky. The best to do when purchasing is to put 20% down payment so that you won't have to make an extra payment to private mortgage insurance. Then you create an emergency fund for 6 months to a year with an estimated mortgage cost so you won't cry on the couch when something bad happens. Therefore, start with those so that you can reduce risk and get the best value from real estate. We care about you, fam, and we don't want you to foreclose your lovely home. Second, search for the best interest rate. Don't be lazy and start searching if you're planning to buy. Yes, prices are high, but you can definitely find the best deal for your situation. Finding the best rate will definitely save you a lot of money. 3. Negotiate. Don't get too attached with just one home. You must negotiate and find the best deals for you. Since there are more houses in the market now, you don't have to pay $100K extra like in 2020 or 2021. So don't fall for those traps. Being smart and being patient are the best way to buy a home. 4. Lock in a fixed rate loan. Rates are moving fast. Try your best to lock it before it goes higher. If you're planning to flip the property for short term, it is best to lock the longest term upfront so you will reduce risk. That way, no matter what happens, your mortgage stays exactly the same. Number 5, purchase for the long term. Plan to keep at least 7 to 10 years. Don't try to buy and flip it, especially during this uncertain time. Right now is not the right time to do that because it might be hard for you to sell. Plan to find a place and see if you want to hold it for the long term. Definitely take time to shop around, build a list of what you're looking for so that you can live there for at least 7 to 10 years. The price will most likely go up by then, so you can stay for free and have profits on the side once you sold the house. This is the power of real estate. But keep in mind, we're not financial advisors. This is informative and entertainment purposes only. Furthermore, if you find a good deal, you can get it because it's hard to predict the future. The lenders are way more strict now, unlike in 2008, and there are other factors to make sure that it won't crash as hard. You can read more about it in the description. However, it's nice to finally see the prices dropping down a bit, right? Moreover, if you're Latin or African American, Bank of America offers 0% down payment. Please read more about it if you're interested, but be very cautious in terms of having money to pay the mortgage. Hopefully this will help you if you are in those ethnic groups. And we're not sponsored by Bank of America. We just want to help our subscribers and those who are not aware of the deal. Now that you're aware of these news and strategies, are you going to invest now or wait until the crash occurs? Feel free to comment below and let us know. Thank you so much for watching and see you in the next video.